Hey folks, James here. It's Sunday, and I'm going to have a very quick look at natural gas. Sunday afternoon, the market opens in a few hours' time, but let's have a look at what happened at the close on Friday. You can see this is a 4-hour chart at Black Bull. This is the Henry Hub price. And look at that reversal candle. Now, if you remember, we went long at just around about $3, just above $3, and we dipped down to $2.99. I had an order to hedge at $2.97, and we didn't get there, fortunately, as it turns out. We formed a reversal candle, the last candle, well, second last candle of the day, after dipping down below that ledge support that we talked about. Let's see if we can make this easier to see. There's that sort of ledge. We dipped down, looked like it was broken, going down. And the very next candle was a bullish engulfing candle, but also with a tweezer body bottom. It's not a proper tweezer candle pattern, but it's a tweezer body. Equal bodies with an equal low on the bodies. Now, let's go and have a look at some of the news that's been coming out very quickly. Let's divert to this. We did get a COT report eventually, and you can see we're just at about the sort of 5-year average. We're currently more or less there at about $3, just above $3. And let's see what happened with the commercials, producers, and managed money. You can see the commercials, 538 long, 490 short, and taking a little bit off the longs and the shorts, generally just chopping back positions, but no real directional change. Producers 196 long, 285 short, so leaning short, taking a little bit off both sides, not much. So just sort of lightening up on positions. And then managed money, 188 long, 135 short, so weighted to the long side and taking more off the short side, so actually weighting more to the long side. Non-commercials, also managed money by and large. 227 long versus 292 short, so roughly balanced as well. And also just chopping back on positions a little on both sides. Swap dealers, 171 long, 35 short, so leaning very heavily to the long side, adding a fraction more to the short side, but still leaning long. In other words, expecting the market to go short. And then other reportables, retail traders mostly, 38 long, 156 short, and taking a little bit off both sides again. So overall, retail is still very heavily weighted to the short side. There are a couple of articles that I've had a look at here. First at Natural Gas Intel. Just want to read what this analyst, Mr. Kevin Dobbs, has to say. And it's quite interesting. And he's saying that the worst of January's chills may have passed, but the winter blast could have an enduring impact on underground supply and prices deep into 2025. So quite a bullish statement. The weekly spot gas national average jumped $1.35 to $4.90 for the period ending January the 10th. The following week, it spiked another $1.71 to $6.61. That was the highest point since Christmas week in December 2022, when Winter Storm Elliott propelled heating demand and froze energy production across the lower 48. So Kevin Dodd sounding quite bullish. Just reading further down, the storm caused well-feed freeze-offs and dropped natural gas production from around 103 BCF per day to as low as 97, according to Wood Mackenzie estimates during the heat or heart of mid-January cold snap, etc., etc. We saw some very strong cash prices as a result. StoneX Financial Inc. Thomas Saul said, we had some very, very cold weather to contend with, and the cash market absorbed that demand that went with that, as it should. Reading further down, coming to the season, we anticipated that storage would be drawn down well below a year ago levels, etc. Elevated futures prices for the coming summer and following winter adequately reflects the adjusted blah, blah, blah. So quite a bullish article written by Kevin Dobbs. Just bear in mind that this was written on January the 29th, so it's a little bit outdated. So some bullish sentiment here, and then looking at the trading headlines, February natural gas futures plunge as cash skyrockets as markets brace for a polar vortex. Plunging temperatures send northeast natural gas prices soaring. Natural gas futures test above $4 on relentless cold. So all slightly old articles here and not really giving us a lot more insight. Let's go back to the charts. I do believe that the charts give us the best story, the best picture, no matter what's written and no matter where it's written. So let's have a look at what happened on Friday again. As I said, we broke down through that ledge. The critical $3 ledge got down to just under $3. Actually $2.98, just missing our hedge order and then bouncing up, forming this reversal candle, bullish engulfing candle with a tweezer body bottom. Let's have a look at the day chart. This really tells a better story. There are my lines, the potential paths that we could follow. We're precariously hanging on at the $3 level. We've still got another one below us, a pretty important one, at around 280. And then, of course, we've got the 250 level down here at the confluence of the triangle top and the rising trend line underneath. So that's a potential target for natural gas as well. Let's zoom in and see what the day chart candle looked like on Friday. And you can see we've got my lines on top of it, but if you look closely, you can see we've got a doji candle. So we opened and closed at the same price, and we had a slightly long lower wick. So let's look at the same thing on the Henry Hub futures chart. And you can see it looks like we didn't close quite as high, but remember this chart's 15 minutes delayed. So we missed out on the last 15 minutes of trading on this chart. which actually pushed the price back up to the opening price. So not quite as clear on here, as this price is delayed or we missed out on the last 15 minutes of trading, but still holding the 100-period moving average, the simple 100-period moving average here on the day chart. Let's go back to the black bull chart. All right, so there you can see that it is actually a perfect doji, with the opening price and the closing price being at the same level, with a slightly extended wick down below us. I want to have a look at this on the spot price very quickly because we're in both of these trades. Let's have a look at this on the Pepperstone, not spot price, continuous price. You can see the same candle reversal pattern here on the 4-hour chart at Pepperstone on the continuous price. It's actually easier seen here. And if we switch to the day chart on this one, you can see the doji candle there. Bear in mind that doji candles are not always reversal candles. They're more like hesitation candles. So this doesn't mean that we've actually formed a bottom. We could still get further down towards those levels that we pointed out. Let me just refresh your memory on those and go back to the Henry Hub price at Black Bull. Have a look at the chart lines that I've drawn in. So if we don't hold this bounce, we're trying to, giving it a good go, as you can see from the 4-hour chart, we may then have to move down to 2.8, 2.75, and if that doesn't hold, we may have to move down to 250. As I keep on saying, that would be the best price to buy natural gas. Nice and cheap, and at this very, very technical key support level. But whether we'll get there or not, I don't know. If we do, I'll have to be hedged before that, and we'll ride that down, take some profit on the short part of the hedge, and reverse the trade to move back up again. Well, I hope you found that useful. Market opens in about 12 hours time from now, so I'm sending this out pretty early. If you enjoy this sort of content, you'll like and subscribe. Word be a gas. Dad joke. See you in the next video.
It's all apple and pears, gotta trade it right. Pulled out me dog and bone, oi, what's the news? There's a breakout brewing, mate, don't hit snooze. I'm in with a pony, keeping stops real snug. On the ladder all morning, sipping builder's mug. Tick-tock, governor, the market don't wait. Scalp that bread and dodge the dead weight. Bull or bear, don't matter to me. I'm a London trader, slick as can be. Tommy Tucker's on, and the spread looks grim. The Yanks just